Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well. You know, it's a nice sunny day here in mid-Missouri, and I hear that you're going to make the most of it.
Yes, that's right. Today's the Clover Classic, which is the fundraising tournament for the Missouri 4-H Foundation. So we're going to go out and hit the course this afternoon, do a little golfing. We're going to be hitting on concrete basically, so I'm prepared for that. But it's a wonderful, wonderful event. Nearly all the ag organizations and agribusinesses in the state come out, and it's just a great day to celebrate the youth of agriculture. So
So
looking forward
Ben,
to it.
Ben, we're always talking about the volatility of the markets. What kind of volatility do you normally find within your golf scores?
Oh, yes, lots. I would like to say I'm pretty consistent, but I think I fit in that bucket of wishing I was just a little bit better. Like many producers saying, I wish I was just a little bit better at marketing. I think I would say I wish I was just a little bit better at golf. But it's fun. It's a good time. So my
Uh,
my my goal is always to play the whole course with the same ball. That is my goal. Regardless of the score, I want to play with the same ball the whole course. So
hey, you know, if I average one ball per hole, then I feel like I've won. So.
there we go. There we
Uh,
go.
Looking at the prices coming into this week, we saw some light fluctuation, nothing too heavy really. July corn was down 6 cents at 5.97. December 23 corn up 9 cents at 5.37. July soybeans were up 29 cents at 13.50. Those November soybeans up 8 cents at 11.79. Soybean oil for July was up a little over 1.5 cents at 49.26 cents per pound. The soybean meal for per short ton was up $3.20 at 401.20. July wheat for the 2023 year was up 23 cents at 624. July 24 wheat up 24 cents at 686. And then that July crude oil up $1.41 a barrel at 72.09. So Ben, some light adjustments there for the most part. Can you just tell me a little bit about the tone of the market that we really saw most of last week and coming into this week?
Yeah, so a couple of things that I think really overshadowed the markets. We had the complete collapse of macroeconomic data at the beginning of the week that spilled over into the commodity markets. That was a result of a number of different factors, but probably headlined by the fact that the US was moving quickly towards that debt ceiling limit, and that was causing a little bit of concern with traders. When it spilled over into the commodity markets, there's just not a lot of short positions or option positions to kind of protect the market up or down. And so when the trading started to the downside, it just kind of created a bulldozer and kept coming. So that kind of headlined the week early on. But then as we move towards the back end on Thursday, the dryness and the weather market really started to appear, and we saw a rally. So the fact that we finished just down 6 cents in old crop corn and July corn, I think is a little bit of a misleading factor, and I put that data in there. So it's my own misleading factor because of how big we traded, the range we traded in last week with both the macroeconomic downside and then the weather scare to the upside. If I can make one more point, I know I'm hogging the time here, but if I can make one more point, that soybean meal complex, so up $3 to trade back above $400 per short ton. Watch that. That's going to be something that I think we're going to see some very strong upside potential in that soybean meal market. That's down $100 per short ton from where in the cash market from where we were trading just a couple of months ago. We were trading above $500. And when we look at that and we think about how tight it is in that soybean meal market in Argentina, we're going to see some very strong soybean meal exports out of the Gulf of Mexico this year as we get into August. That I think is really going to help that soybean meal market.
So really, Ben, I guess a good deal of potential there for prices to keep creeping back upward.
Yeah, especially in the soybean meal market. Yeah.
Yep. All right. Well, looking around, I guess kind of like in baseball, around the horn, looking at general factors that we're seeing. So oil prices, we're up on the week. Really, what is this signaling to you? Anything to really take out of that?
Well, so the big concern for me and maybe the oil market is this weekend OPEC plus, which includes a number of countries, including Russia, released a deal Sunday that they plan to extend production cuts to help support oil prices for longer than they had initially anticipated. Plus, Saudi Arabia came in and announced that they would be making, big cuts, about 1 million barrels per day in reduced production moving forward. That's all in the name of helping get oil prices higher. We're sitting right around $70 per barrel, which is kind of the threshold because that's the kind of the mark that the U.S. government has said that they would like to see. So they're going to be buying back oil once we get below $70 a barrel back into our strategic reserves. But globally, $70 per barrel seems to be lower than the appetite of many countries, and so reducing production is going to lead to higher prices. That trickles into higher gasoline prices this summer, lower ethanol and corn use as a result of that. So that's something to keep a watch on as we look ahead to the next couple of months.
Well, as we see potentially those higher prices come in, what does that mean for gasoline demand when we look at the summer driving season? Because, it was down a little bit over the week compared to last year. So do you see that the summer driving might be pushed down just a little bit?
Yeah, so gasoline demand was down 4% week over week for our most recent week. I anticipate that to be back up this week because the next round of data will include the Memorial Day weekend. And so I anticipate this coming week we'll see stronger gasoline use. But to your question, to your broader question, what does this mean to overall gasoline demand? The expectation was that while we're $1 per gallon lower in gasoline prices now than we were a year ago, the expectation was that we would use more gasoline this summer. And I still think we're going to use more gasoline this summer than we did last year. But that's now starting to taper off. Two factors. One, higher gasoline. We probably will be starting to see higher gasoline prices at the pump due to higher oil prices. The second thing is kind of macroeconomic uncertainty that's starting to trickle its way through the economy. As the Fed has increased interest rates over the last year, plus some months, we're starting to see that now start to impact consumers, and they're starting to pull back on consumption. And I think that'll start hitting the energy market here pretty quick.
Well, and Ben, as we see, these factors really pushing the energy market into, maybe a higher price direction. What does that mean when we look at the trade market, when we look at maybe the cost of shipping a lot of these products? Because while we did see the export sales, did go up, here recently, still, the outlook might be a little bit neutral as far as what that could mean. So, but what are your longer term expectations throughout the summer?
Yeah, so we don't ship a whole lot of product this time of year. A lot of it's corn, but even now we're seeing Brazil dominate the international corn market. So it's going to be later in the summer, maybe August, September, before we start seeing, the corn shipments like what we would normally see. And so I think as a result, higher oil prices, increasing transportation costs, likely, is going to be a little bit more muted this year because we're just not shipping as much product. So that would be kind of my general sentiment there. You mentioned ag export sales or ag exports. That's been something that we've kind of really harped on the last, I don't know, 2 months maybe now. They've been really bearish to the market. I don't think we saw anything this week that really changes my mind in that complex. The one bright spot was on the grain sorghum sales. Grain sorghum experienced a 3-month high, all into the Chinese market. So that's them signaling they need some grain sorghum for feed use, and we saw a very strong week of sales there.
All right, Ben, I know the topic you've been chomping at the bit to get at. We have the USDA supply and demand estimates report for June coming out in 3 days on June 9th. What are your early expectations for what we might see coming out of USDA, talking about looking at where we sit for carryout and overall demand?
Yeah, so June is the second iteration of the new crop balance sheet for USDA. It's a big report. We don't quite get into some of the yield changes due to weather yet. We have seen USDA make changes in June, but it's not common, and I don't think we'll see them this year either. It'd be a big surprise to the market if we saw yield changes or acreage changes for that matter here in June. Usually those come in July. So just that is a precursor. On the old crop side, I do think we'll see probably increasing ending stocks due to lower demand, potentially for all three commodities. And I'll quickly just kind of go through here what I see for the different, the three. On the corn side, it's really the export, corn for export, and then corn for ethanol use, where I think the revision is possibly going to come. On the export front, we remain 80 to 100 million bushels below where we need to be to hit USDA's target. So they could start backing off that corn used for export number. On the ethanol front, we're about 40 to 45 million bushels behind where we need to be. We've already talked about some of the challenges with the summer driving season, corn used for ethanol. So we could see USDA make a revision downward on the corn used for ethanol number. On the soybean side, I don't know if we'll see much of any changes. If anything, it could be a little bit on the export front. We've seen sales come down, and as our exports have been shipped, we haven't been replacing that with the needed sales to kind of hit our target. So it's probably still early to make a revision to soybean demand at this point, but we could see it in the export number. And then on the wheat front, it'd be that export number as well. So we're now at the end of the marketing year. We have one more week of just one day left of inspections to kind of go on the wheat front, but it looks like we're going to come in about 35 to 40 million bushels lower than where we had initially intended on that wheat export number. So that's for old crop. Sorry, that's for old crop. I'll make one other comment about old crop just on the global front. So we're now, pretty much through Brazilians and Argentina's soybean harvest season. And so we're likely to get maybe a final estimate or close to a final estimate on that soybean production. And I do think that South American total soybean production could come down about another 2 million metric tons. That largely comes for another reduction in Argentina soybean production. All right, sorry, Will, I didn't mean to cut you off.
All good. So, looking at what you just said there, expecting the carry out to maybe be bumped up when you look at a lot of these old crop products. How does that really set the tone for the new crop market? How does that then, I guess, relate to the market whenever we look at maybe some softening in demand factors and then a little bit more grain and oil seeds in reserve?
Well, certainly it kind of puts a bearish tint to the market, and part of that is due to just larger ending stocks lead to larger beginning stocks, and larger beginning stocks lead to greater supply for the new marketing year. And so that's kind of where we're at, I think, in that realm. However, I will say that the weather premiums and the weather market starting to impact this crop is going to have a bigger impact than any of this carry it through and supply. As a reminder, we're talking about maybe 50 million bushels of corn of extra stocks carrying into that new crop. If we were to take a bushel off the national yield, now we're starting to talk about hundreds of millions of bushels potentially. And so it's just, bushel or two off the national yield, talking about 100 million bushels of
that's a lot more impactful than the 50 million.
Right. So that's kind of that's the swing we're in. It creates a bearish tint, but that can quickly be overshadowed by, if we continue to be dry here in the month of June, and that really starts to hamper yields.
Well, and just looking, at the level of impact of the June report, I'd imagine the July might give a little bit more insight overall into the current year's crop. So that might, I guess, sway the market more so than the June. Correct me if I'm wrong there.
Yeah, absolutely. And a couple of reasons that I'll just point out. As I started, June, we can see revisions to acreage and yield in June. It's uncommon. Usually those happen in July. And the two data points that really impact that in July are that acreage number that we get here at the end of the month. And then also, we're that much further along in the summer growing season, and the weather forecast in the beginning of July really start to paint the picture of what the next 2 to 3 weeks is going to look like. And that's prime pollination window for U.S. corn production. So where a dry June has traditionally met good yields. That's what a dry June has traditionally met. However, a dry June and July could mean big news, big bullish news to the markets. We're seeing some scattered showers. It's kind of a game of the haves and the haves not. But we're going to need broad spread rain to kind of change the market sentiment here of a dry July.
All right, Ben. Well, looking out through the rest of the week outside of the WASDE report on Friday, what should farmers and ranchers really be paying attention to?
Well, that's the big one. Everything else is pretty standard. The Friday at 11 o'clock Central Time is going to be that USDA supply and demand, the WASDE report, the World Ag Supply and Demand Estimate report, comes out at 11 o'clock, and that has the potential really to kind of head us into a week, and kind of tee up a weekend where traders might be a little bit nervous about bullish surprises due to weather or bearish shocks due to economic factors. So
that's the one to watch.
It's the one to watch.
All right, Ben. Well, it's always a pleasure getting your insight on here. Viewers, listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.